What is going on, everybody? Billy here from Storm Trades with another trade recap. Today we're going to run through my 6E, that's Euro USD futures, a short trade that I took for a 2-hour win on Friday, August 8th during the AM New York trading session. We had time frame alignment and a clear bearish daily bias. Let's get right into it. Right now we're looking at the daily chart, just the last 4 daily candles. I mark up my daily chart same way every day, and if you've watched any of my videos, it's the same way every time. Trying to make this entire process as simple as possible. So first things first, I'm going to mark off the previous daily low, previous daily high, and let's run a fib, right, which is right here from the previous daily candle, just to sort of see where the midpoint is. Now, we're always looking for internal and external range liquidity because price books from one to the other. So do we currently have, or are we delivering out of any sort of internal or external range liquidity? Yes, we're actually inside, and this morning we're inside of a big daily bearish fair value gap. We also happen to swept, the previous day, right? So Thursday in this case, because we're trading here on Friday. Thursday had swept, right, and then back into the range. Tuesday's high. So for anybody trading C2 or cheat trades, right? I learned a lot from just watching his free videos online. This is a C2 sweep. So technically, where we are here on Friday, this is a C3 candle, and if we expect price to displace lower, we would in fact look to take lower targets. So price books from internal range liquidity to external. Do we have any external range liquidity? Just so happens we do. We have a swing low here. So this is a daily swing low. So this is one of the most clear daily biases I've had all week. We're inside internal range liquidity. We have swept a previous high. We have moved back down into the range. And remember, we cannot reverse without a swing point. So this being the C3 candle, right? For those of you who understand that, we would expect price to move lower. We have something to reach for. Obviously, we're probably not going to go all the way down to the swing low here, but we need a clear draw on liquidity. We have this previous daily low, right? There's always a large liquidity pool below swing lows and above swing highs. All right, so I have a bearish daily bias. That's it. That's way longer than I normally take to actually get my daily bias, but this is how I mark up my charts every day inside of the Unicorn University Discord, where I post my analysis. All right, I'm going to pull up the hourly chart now, and on the hourly chart, we're always looking for a story that's being told, right? So pretty clear here that on Thursday we had high of the week, right? And what happened after that? We had a displacement back down, creating a change in the state of delivery, okay? So we would not expect this high to be taken again, okay? If price is in fact reacting out of this bearish daily fair value gap, we would see price find resistance here at this change in the state of delivery, which we did, and we would look for price to find some sort of reason to go short in terms of where price is currently located. So anyway, whenever I find a change in state of delivery, I want to take the swing high and the swing low and map out some standard deviation levels and sort of see, does this make sense with the overall narrative? Well, it does, right? So first low-hanging fruit, whenever looking at a standard deviation, is the -1 to -1.5. And a lot of times we will see a retracement, okay, back into the range at that level. As you can see, we have not touched the -2 to -2.5. Now, can we match up any liquidity around that area? We can, right? We have a large unmitigated hourly fair value gap down there. So that'd be something to target, right? All right. Now, something to note here, right? At the time of analysis, right? At the time of analysis, this is right when we're going into our trading session. We have just recently taken this London high, okay? Very interesting, right? It's a swing point, but it's also the London high, swing high, right? So there's a lot of liquidity there, and we love to see price react from that. Now, are we currently inside any sort of internal range liquidity, right? We are. We have a bearish, right? So previously unmitigated bearish hourly fair value gap. This is my green light to start looking for trades in the direction that I think price is headed, right? So I have come up here and look, we even had a little sweep here. So I would expect the, this is the 11 o'clock candle. So between 11 and 12, I'd be looking for a move lower. It's in fact exactly what I was looking for. So I'm going to go ahead and mark out here. This is what I'm looking for, right? Everything is because I have a playbook, right? And as price is happening, I am updating my playbook. I'm trying to understand where invalidation levels would be. So as an example, my invalidation to this idea right here would be if we would have pushed up and started closing through this bearish hourly fair value gap, creating an inversion, and then I would maybe expect the midpoint of this this wick to get ran, right? So let me just pull that, right? That's not that big of a deal, but let's just see. Okay, so I maybe look for something to happen like that. That's my invalidation, all right? Very important to have an invalidation and also to understand some draws on liquidity. So I'm going to go down to the M5 time frame. Okay, now on the M5, I am looking for, okay, this is a signatures and price I'm looking for. I'm looking for a manipulation or a some sort of a move to up in to take some liquidity. In this case, check this out. We have just taken the London high, right? And I'm going to move this over. We are in the process of potentially a liquidity raid here. Okay, we don't have that yet, but we have. This was a swing high here, so previous hour high. But right here, we are inside some internal range liquidity, and I'm looking for now a move back down into the range that creates some sort of a change in state of delivery, and I'll look for other signatures in price to sort of give me a hat tip to whether or not we are actually on sides or not. So mark this off right here as this would be the change in the state of delivery after this next candle. See right there, this was the last up close candle prior to the move, prior to the displacement move lower. Now in this particular, I like the high time frame setup here. I love matching the daily buys coming out of the large daily bearish fair value gap, along with taking the London high and engaging with and delivering from the bearish hourly fair value gap. So I actually utilized this fair value gap that had been inverted as a way to get involved with the trade. Now I just want to make note that we have a decent amount of low resistance liquidity here, and we always talk about the 1/3 ADR. So I pull that up. In this particular case, we have not swept the 1/3 ADR. It's way up here. So we haven't swept it yet, and I'm looking for lower prices. I want to see where is the 1/3 ADR. Do we have a lot of room for a trade? So all the way down here, got all this low resistance liquidity above us. So I feel comfortable taking a trade here and putting a stop just above the inversion right here. So I'm going to go ahead and put that there. I did actually wait for a little retracement here to go back into the inversion fair value gap, and this is a it's just a 2R trade. That's all I took. Look, that doesn't even get us to this low resistance liquidity run. I don't need to get all the way down here, right? I'm trading Apex funded accounts. I'm trying to get in and get out. If I can get a 2R trade on an Apex account, that is huge. So, yep. So that said, I'm gonna go ahead and put price here on this very next candle. We got involved. And right there, stop loss here. Okay, I'm gonna move that up and take profit at 2R. All right, so let's move price forward, and boom. It was a very fast trade. The logic was sound. We had a lot of liquidity that made sense. High time frame was a clear bearish bias on the daily. The hourly market structure made sense for me. We had engaged in some hourly POIs. Lower prices were in the cards. Now, funny enough, once we hit 2R, really kind of came back up, didn't do anything, and reversed from there. But just goes to show you that if I would have tried to get something stupid like there's 5R, right? I mean, even to come down here at 2.7 or over 3, I would have been too greedy, and I would have missed out on the trade, right? I would have missed out on a quality win. Okay. Here's the actual trade right here that I took, right? Posted this inside the Discord. Anyway, I just want to thank you guys for watching. If you get anything out of this, I really appreciate it. I get a ton out of doing these, sort of going through. I've been getting better and better at trading just by going through my logic and understanding really why I'm taking these trades, even after the fact that I'm taking them, right? Because you have to really dig in and understand what you're doing when you're doing these videos, and you have to be very methodical about it. And I'm very methodical with how I do my analysis, and I post all that. But being methodical in how you go back and review your trade is very interesting, and learning a lot doing it. So you guys have a great day, and please smash a like, subscribe, or comment. I love the comments. See you guys. Have a good one.